Hey everyone, welcome back to Corporate Decoder. Today QVC Group Incorporated just filed an 8K and I am seeing a major shift in leadership. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells a story of a company trying to reshape itself after some tough times, and key people are leaving to make that happen. So, QVC Group Incorporated, or QVCG as it is traded on the stock market, has filed what is known as a Form 8K. This is basically a report for big, important events that happen between their regular financial reports. Think of it like a company announcing significant news right away to the public. The big news here is that QVC Group is going through an operational realignment after emerging from bankruptcy. Now, emerging from bankruptcy is a huge deal. It means the company was in a really bad financial spot and had to go through a legal process to sort out its debts. This realignment is their plan to get back on their feet and run things differently. The core of this filing is about changes in leadership. Two top executives are stepping down: Stacy Bowe, who is the president of HSN brand and US merchandising, and Alex Wellen, the QVC Group president and chief growth officer, will be leaving on the 4th of September. Miss Bowe was in charge of a lot of the product side of things for both the HSN and QVC brands in the US. Her job involved buying products, planning how they would be sold, and marketing them. The report highlights her success in making the brands more well-known through new product launches and working with celebrities. Mr. Wellen was focused on growing the business through new channels. This included things like selling on social media, streaming services, and other digital platforms. The report specifically mentions that under his watch, QVC became a top seller on TikTok Shop in the US, and they expanded their presence on streaming and other digital places. What this means is that the company is getting rid of some of the top leadership positions. Specifically, the president roles for what they call their QXH and growth businesses are being eliminated. This is a direct consequence of the operational realignment they are restructuring to be leaner and possibly more efficient. Mike Fitzgerald is a key figure in this shuffle. He was the president of QVC US brand and also the chief operating officer. He is moving to a new role as president of QVC International and will still be the chief operations officer. This means he is no longer leading the US brand directly. His move into the international role is timed with the retirement of the current president of QVC International, Aidan O'Meara, who is retiring next spring in 2027. This suggests a planned succession for that international leadership. Now, if you want to dig into the nitty-gritty of what drives these kinds of leadership changes, you really need the right tools at decoded.report. We track companies like QVC Group Incorporated, breaking down their filings into plain English and highlighting the key risks and opportunities. You can find that page linked in the description and the pinned comment below, and it updates automatically to keep you in the know. The fact that QVC Group is undergoing this kind of shakeup after bankruptcy is not entirely surprising. Companies often make significant changes to their leadership and operations to try and set themselves up for success after such a major financial restructuring. Eliminating roles and bringing in new focus areas are common strategies. QVC Group is traded on the Nasdaq. As of my last update, their stock was around $15.35 with a 52-week range between $14.6 and $20. They employ a significant number of people, around 16,900. This leadership change could signal a new direction for the company, and investors will be watching closely to see how these moves impact performance. Looking at the broader picture, this filing is essentially the company announcing to the world that they are serious about rebuilding after their bankruptcy. The departure of these executives, especially those in key growth and brand management roles, suggests a pivot in strategy. It could mean a focus on different markets, different products, or a different way of doing business altogether. The challenge for QVC Group now is to execute this realignment effectively. They need to show that these changes will lead to better financial results and a stronger competitive position. The market will be looking for signs of renewed growth and profitability. The fact that the company is taking these steps indicates a proactive approach, which is generally a positive sign for a company emerging from such a difficult period. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.